Even though interest rates are going down, a new report shows many people are drowning in debt. Equifax Canada reports that mortgage delinquencies nearly doubled in Ontario from 2023 to 2024. Rates are also up in BC and Quebec. The trend signals the potential not only for a wave of defaults, but an indicator of deeper financial strain. Joining me with more on this is Rebecca Oakes. She's the Vice President of Advanced Analytics at Equifax Canada. Good morning to you.
Good morning.
Let's talk about the delinquency rate in Ontario. It is now at 0.22%. I'm going to say that again, 0.22%. It's a small number overall, but with 1.2 million mortgages set to renew this year across the country, how concerning is this trend?
I mean, it really is a concern for us. When you talk about mortgage mispayments, individuals will try their hardest to keep making the payments on their home. And so as we start to see mispayments increasing, we also see mispayments on other types of credits. So things like credit cards and auto loans. And that's really why we are so concerned, because those numbers are increasing. And unfortunately, so far, the reduction in interest rates isn't yet helping.
This year, as I mentioned, 1.2 million mortgages are coming up for renewal. Most of those were secured when the Bank of Canada's key interest rate was at or below 1%. How much worse could this get?
I mean, we certainly expect to see these numbers continuing to rise. I mean, as you just mentioned, the latest round of renewals we're going to see this year, they are starting from super low rates on their mortgage. So even though those Bank of Canada rates have come down, there's still a fairly significant delta or kind of gap. So when those mortgages come up for renewal, we do expect to see many individuals seeing payments rising. And in areas like Ontario and British Columbia, the mortgage amounts are so much higher because property prices are higher as well, and therefore they are going to see the biggest impact to their monthly payments.
Rebecca, when we look at the overall picture, what do these numbers tell us about the state of people's finances in general?
Well, we've just been talking about mortgages. When we look at individuals who aren't homeowners, those individuals who are renting, we see younger consumers, lower income individuals, missed payments are rising on credit products as well for those consumers. So we, in our report, we are talking about a kind of widening financial gap where there are some individuals who are really quite stable and doing good right now. And actually for others, there's just this increasing financial strain. And that's really why we are still concerned for 2025.
So what can we do? What can be done?
Well, I mean, the good news is that interest rates have been coming down, and as they continue to come down, that will give some relief to kind of those individuals who are renewing their mortgage, or indeed if you're looking to kind of use other types of credit, lower interest rates does help. I think in terms of what you can do as an individual, budgeting is always a good thing. If you know that there is the potential to see your payments rising, then looking at your individual finances can absolutely help. But, there is a lot of uncertainty for 2025. There's a lot of talk about tariffs, and that is going to create some risk for the rest of the year as well.
Vice President of Advanced Analytics, at Equifax Canada, Rebecca Oakes, thanks for your time.
Thank you.
If you like that video, make sure to subscribe to the Your Morning YouTube feed, where you can find all kinds of new content posted every weekday morning.